What's up, everyone? It's Scotty with MoneyVest. So it's time for us to once again talk about Tesla stock, which doesn't seem to find any type of floor. It just keeps on falling further, and it was down another 3%, I think, on Friday. So sold off once again pretty aggressively, down to now sub $220 per share. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. There's over 45 lectures and tutorials that you can join and take advantage of. These are all options trading, fundamental analysis, technical analysis, as well as the buy and sell alerts, options alerts, trade ideas. Everything's going to be included as part of the Discord. And there's over, again, 1,200 people that you can connect with globally. These are very successful traders and investors to learn from. And again, there is a 16% annual discount that's available for a few more days. I've opened up a couple more spots, so link's going to be down below. So first things first, of course, there is a lot of concerns with the Red Sea attacks. So that is causing Tesla's German factory to be suspending production for 2 weeks, which is going to obviously cause a little bit of some delays. From macro perspective, we learned that Tesla delivered over 1.8 million vehicles in 2023 after the delivery numbers came out, with production and delivery numbers both hitting a record in the fourth quarter of 2023 at over 490,000 vehicles. But for this year, if Tesla wants to maintain a very nice CAGR of over 50% since 2020, they need to, of course, be looking at over 2 million vehicles, both in production and delivery volumes as well. So this, again, is going to be a little bit of a setback for Tesla when it comes to production numbers and of course, factory being suspended for 2 weeks. Now, there's another reason why Tesla's been selling off. In fact, there's been a couple more reasons. Number one, the cost is going up because of Tesla increasing the pay or the wages after the unionization at other auto manufacturers. So since Tesla, there is no unionization, but they are still raising wages to avoid unionization among workers. So that, of course, increasing the costs and expenses is going to thereby reduce some of the earnings and profitability. And finally, Hertz is dumping Tesla. Why? It's a very bad news for Elon Musk. So Tesla's resale value is actually pretty bad, right? So because of all the price cuts that Tesla has done over the last year, and aggressive price cuts, in fact, that has meant that the resale value of those vehicles have decreased significantly. And if you're a company that buys a ton of vehicles and the value of those vehicles falls substantially, that's bad for your balance sheet because, it's going to be a big write-off. And that's exactly why Hertz said that it is going to take a $245 million hit to its balance sheet as a result of selling off the vehicles. Selling off the vehicles tells you that the cost of keeping those vehicles were greater than that. And part of the cost, according to Hertz, comes from the fact that Teslas in particular are more expensive to repair and parts can be harder to come by than your standard fleet car. And Hertz attributed the push to reduce the number of EVs in its fleet to an effort to lower what it calls damage expense as well. So not only is, of course, Tesla's resale value in question, and of course the parts and the difficulty of repair, but it's also related to demand. I mean, if people are not really driving electric vehicles, what does that tell us about the demand for electric vehicles, right? Because Hertz did order 100,000 vehicles back in 2021, and they are, basically getting rid of close to 30% of their entire fleet, or basically electric vehicle fleet, in 2024. So that, again, is coming at a time where Tesla, technically speaking, is already in a little bit of a downtrend. So of course, it's been selling off, and this right here is the overall pattern where Tesla, as we know, has been part of this major downtrend of lower highs and lower lows, perfectly getting rejected. And these right here are the lower highs that it continues to form, and lower lows are going to be 1, 2, and if, God forbid, we'll see what happens, but 180s, 190s could be that next level if it, of course, continues to trade in that range. So this right here is boom, boom, boom. It's kind of like a game of ping pong where it continues to kind of bounce and trade in between this downtrending channel. And that's exactly the reason why I think it's really important to kind of understand and become familiar with how to trade options. Tesla options are so good that you just cannot ignore them. You just cannot avoid them because of the fact that Tesla premiums are so high because of higher implied volatility. Because of volatility in general, Tesla is a very, very liquid stock. It's a very traded stock. That's why if you look at some of the resistance levels here in between 275 to as much as 300, there is a very high premiums for when you are selling calls on a Tesla. That's exactly the whole point. That's exactly what I did. And I was able to lock in 70, 80, 90% profits on those calls as they expire worthless, as Tesla further and further moves out of the money. Now, this right here is going to be a very strong support, something that we have discussed. Now, I do get a lot of questions. Is Tesla a buy right now? Is Tesla worth buying at 218? Well, folks, a simple answer is that my analysis, my thesis on Tesla, it is one of my biggest positions, is not on the idea that it's going to eventually become a technology company. If it does, great. If it does, absolutely fantastic. It's going to be the cherry on top, but it's not my main core thesis. It's not what I'm betting on Tesla for. What I'm betting on Tesla is simply because of this transition to electric vehicles. It is an electric vehicle company at the end of the day for me. Might not be for you, but for me, it is an electric vehicle company, at least today. In the future, nobody knows. With autonomous driving, with Optimus, with robotics, with solar, everything that's Tesla's in the works right now, it could eventually become a technology company. But until the revenues actually start coming from that part of the business, it is still an EV company. And I will still give it very reasonable electric vehicle multiples. And for that reason, my fair value sits at 150. So as you know, we've talked about this right here being my intrinsic value. So this right here, previous support, it's going to be sitting roughly at 150. And that is exactly where my intrinsic value, or my fair value, still sits on Tesla. It's been a long lasting debate. We've talked about this over and over again. It's been several years of kind of arguing and debating and discussing about Tesla's valuation. But at the end of the day, 400, of course, was way too overvalued. This right here, $100 was way undervalued. 150 is where I believe the true intrinsic value sits for Tesla as of today, based on the valuations, based on the forecasted earnings. But that doesn't mean that I can't trade options, and that doesn't mean that I can't swing trade the stock or hold on to what I believe long-term is going to be a very, very good potential investment. So that being said, support level, keep in mind, is going to be inside this green rectangle. We'll see if Tesla holds the line. What I believe is going to be a very, very important level, that's going to be the 200 simple moving average. So if I bring up the moving averages and if I remove everything from the chart and simply keep the moving averages, this is where Tesla is. The 200 simple moving average, you'll notice that we somewhat kind of validated that support in the past and we bounced right back up. So Tesla did rally a little bit over 27% from those levels. And right now, of course, 3 consecutive weeks of red. And right now we're sitting perfectly right above that 200 SMA at $217. So that is going to be the level to watch. If Tesla can hold the line here next week, it can actually give us some momentum back up, a little bit of a green week, then it's very good. But otherwise, if you do end up breaking down, then the really important support is going to sit inside this green rectangle. Then it's going to come down to the buyers for the demand to step in at these support levels. If it doesn't, then we're looking at sub 200, possibly 180s. And of course, 150s, that's where my fair value is. And that's where I will be looking at selling some cash secured puts on a Tesla to potentially be buying once again. So that's the entire analysis. Yes, Tesla is going through a little bit of a rough time once again, but in my opinion, if rate cuts continue, the demand will start to pick back up. And of course, as a result, margins, we need to see what the fourth quarter 2023 margins are going to look like when Tesla reports on January 24th, I think is when the earnings are coming out for Tesla. So anyway, at the end of this month is when they are reporting. So Wednesday, January 24th is when the earnings are going to be reported. Earnings season just getting started, so there's a lot to look forward to. I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Let me know your thoughts down in the comment section below. And what do you think and believe about Tesla? Are you buying, selling, or holding? What are your thoughts? As always, make sure that you drop a like, subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members-only private videos. That 16% annual discount that's available for a couple more days. You get access to all the binds alerts, options alerts, trade ideas. Everything's going to be included. So always happy investing. I'll see you all in the next video.